What's up, guys? Thank you guys for joining us tonight. I recorded a video. The mic wasn't on. I literally did the whole thing and it wasn't on. So, I'm going to start out with this. This is one of the most important live streams that I've done, guys. Let me make sure I have sound and everything's good to go. All right, we're good. So, I'm going to say this one more time. This is the most important live stream that I've done. I have an incredible lesson that I want to go through with you guys. I have a really awesome. I want to discuss what's going on. I have a lot. I want to help you guys tie this in. If you could, hit the like button and subscribe if you haven't already subscribed. Leave a comment down below. Share this with someone, a friend, a stranger, anyone. This live stream is why I do this, okay? I would like to be able to reach someone that is looking for the help that they need. That does not have $1,000, $2,000, $3,000, $10,000 to get this type of education, guys. It's a tough time we live in. I really want this video to get to the individuals that really need it, and you would help that by liking, subscribing, commenting questions below, sharing it with a friend, individuals, and anyone, right? I don't care. I would like this video to reach someone that could really, truly use this type of help, right? Because it's a tough time we live in again. So I'm going to cover a little bit of what's going on right now, right? I'm going to cover the Fed. We have the Fed. We're going to cover a little bit of what we have going on. I'm going to get into this trade idea, this Tesla short that I took today, all right? I still think that this trade is going to play itself out, okay? I want to draw back to Monday night. Sunday and into Monday night. I knew this was coming, guys, right? This is why I do this, is to help you guys. So again, if you haven't done so already, like, subscribe, comment down below. Let's help get this video to someone that really needs it, especially the time that we're getting ready to come into. Guys, it's coming. I'm telling you right now, it's coming, right? What do I mean by it's coming? We're going to start seeing the signs of the recession. It's coming. I promise. I promise. All right, you're seeing it with Dick's Sporting Goods, Macy's, Foot Locker. All right, that also is going to lead into another trade idea that I'm going to have for you guys. So again, like, share, subscribe if you haven't already done so, and share this with someone, a friend, a stranger, any type of trading place that you know of. Facebook, Twitter, Instagram. You can follow me again on Twitter, Ivy League Trading. All right, so first thing that I want to get into, all right, is what I said Sunday night. I repeated it Monday during the live stream, and then I said it Monday night. I could have not timed this trade any better. Let's go to my live stream. 2 days ago, 2 days ago, 2 days ago, Sunday, Monday, Monday night. This was Monday night, okay? This is an hour and 25 minutes. That's how we know it's Monday night, because it was alive. Again, I tried doing a video. That video had no sound. So I tried to tell you guys, this is probably the time where you might want to think about TLT. Now, the meat and potatoes of that trade is not here anymore. Now, it could go on much, longer. There could be another rally. But what you just got in TLT is incredible. Look at this chart, guys. And I want to be able to help you identify these type of chart patterns. And it's not even a chart pattern that's going to help you find a trade like this. If you were in calls, if you bought it outright, I'm telling you right now, the pace in which this 2-day run is incredible. This is a type of trade that will make your month, if not make your year. Right? This is going to give you returns that you're going to look for in a month to 2, 3 months, 6 months, depending on the type of invest you are. This is the trade you look for in a year. All right. Just today alone, it's up over 2.5%. All right. I just showed it to you on my live stream that I tried to tell you guys. This is probably the time to start buying TLT. Again, I have been so thankful to be able to do this. Right. That's 3.5% in 2 days' time. That's a lot for TLT, guys. That is a lot. All right. That's some serious change there. I've done this before, and it's because if you don't know, I have been trading for almost 10 years now. If you don't know, you can find us live right here on YouTube, Ivy League Trading, youtube.com, 7:30 to 4. Sometimes I come on a little bit earlier. We discuss the game plan, the news, what are we going to do that day, all right? So we have a lot of things taking place right now that I want to help you guys, start to focus on towards the end of this week into next week. And I'm going to tell you right now, I'm not too worried about Powell, right? We do have Powell. We do have some data that we get tomorrow. You're really going to want to see that. But more importantly, I'm going to touch on a few things, and I'm going to get into this trade, right? This trade education, this trade lesson is so important. I cannot stress it because you're going to see it, right? You're going to see it for your own eyes, and you're going to start to say, yeah, I need to start doing that. All right? So let's get into it. I thank you guys again. If you haven't done so, I urge you. I plead you. Hit the like button. Subscribe if you haven't already done so. I want this video to reach the people that need to see this. All right? Because a lot of this stuff, people charge for this type of information. And again, if we could, I want to make this my biggest liked video and my biggest shared video, and so on and so forth, because this is the important stuff that you guys need to know about trading, so you can not only not lose money. This is about not losing money today. All right, this is about not losing money. You're going to see. All right, so we're in a place right now where we are starting to see this signs of recession. I felt it last week, and I'm still feeling it now. This is also what brought me to TLT. I'm going to show you what brought me to TLT. It's not volume. It's not this. It's not that. It's using all of the above. Let's get into one lesson right now. All right. If you don't know, I've been trading. My name's Justin. I've been trading for almost 10 years now. I've been through quite a few different market cycles. I do a lot of work, a lot of studying. It took me a lot of time to get to where I'm at, and I would hope that you're able to get there with this information if this information finds you. I hope it does. All right, guys. So I'm going to start off with what's going on. What is the most important thing that we should be looking at? We should be looking at the dollar. All right, dollar is what the dollar does is what yields are going to do. But how do we find out what is doing what with the dollar? Let's go to this right here, Euro USD. This is a daily chart. Now you're starting to see the volume pick up here. All right, so what are some of the things that we see here? This is a daily chart. I want you guys to notice what it's doing, right? You've broken out past previous what? You've broken out past previous resistance, okay? Previous resistance right here. This whole box right there is previous resistance, now turning into support. Okay, if this finds support right here, you guys, what else can I use other than support? All right, and this isn't the trade lesson. This is how I got to find TLT, or came to the realization that, and I said it before in my videos, that early in the summer, during summertime, that was not the time. That was not the time to play TLT. Yesterday morning was the time to put on a position. You would already be taking profit right now. You would already be taking profit, and your risk would have been like this. All right. Here's the euro versus the US dollar. It's coming into support. If this comes into support and the euro starts going higher, what does that mean? Right? And how can we say that, hey, this may go higher? Right? You got a little bit of selling here, but on an increased selling pressure, you still didn't break. You still didn't break. You got a slight cup and handle here, right? Cup, handle, bang. You rallied, pulled back. We're finding support. You're starting to see some buyers step in here. We also have data tomorrow. This data, it's funny how it lines up, right? This data is lining right up at support. Let's go to the dollar, right? So the dollar is also what? The euro is oversold. What's the dollar? The dollar's overbought. The dollar also is putting in higher lows on the RSI. The dollar is also still in that range, at the top end of the range that we've had up for weeks now, right? This was our box where we said, hey, this was our target. We were down here when we posted this target back in early July, right? My videos will show it, right? This was the area. This was the range. It's still working. So if the euro starts to go up, what's that going to do to the dollar? That's going to bring the dollar back down a little bit. If the dollar comes back down, what does that mean for yields? That means yields come down. If the dollar comes down, what does that also mean? That means that gold can also rise up. What's up, buddy? How you doing tonight, man? I can't really see it right this second. I'm going to see your comment. Just wanted to say God bless you, bro. I hope you're doing good. And hope you guys could take advantage of some of these thumbnails that I put up for TLT. That was an insane move that we've gotten on TLT. And I'm trying, like I say, I'm going over a lesson right now to show you guys how we do it. So I'm expecting the dollar to start pulling back, right? That's going to put a little bit of pressure off of equities, okay? Let's go to the 10-year, which is what's caused this pullback in the equity markets. Look at the big pullback, right? Look at that big pullback. It's also overbought, okay? You need to go longer duration because, again, that after you had that Fitch downgrade on longer-term U.S. debt, that's what brought this long end of the yield curve up. If you don't know, the yield curve was inverted, right? The low end was a lot higher than the long end. Now it's pretty much the short end is up here. Now the whole back end of that yield curve is being lifted up. So the whole yield curve is being lifted right now, right? It's starting to uninvert. There's your US 30 pulling back, 10-year pulling back. These here are giving you trade ideas if you don't have trade ideas during the day. So if I know that these are pulling back, if I know the dollar should start to pull back and the euro should start to get bought up a little bit, right, for whatever it is that they have going on to try and cool things down. Because if the Fed can sense it, the currency traders, equity traders, everyone is sensing what's going on. We're a bit oversold. We've had such a tremendous run right now. It feels as though we're getting a pullback, and we're going to use all the indicators that we have. Let's go to gold. Look at gold. It's starting to turn itself around to climb higher. Everyone said here was a reverse head and or not a reverse, but a head and shoulders. It was looking bearish. Well, we'll see. This head and shoulders with an RSI that was oversold the way it was told me we're more likely to have a bounce than we are to continue to the downside. Okay? So if I know the euro is looking to start bouncing, not to say that it does, but it looks like it is. Looks like the dollar's pulling back. Looks like these yields are pulling back. That's where I look at the euro, I look at the yen, I look at Deutschmarks, and then and the pound, right? But more importantly, the euro and the yen, right? You want to pull up the yen, USD, and it's not going to give it to us. I don't know the ticker on it for here. So, oh, JPY. There we go. USD. I'm sorry, guys. So, the yen should start to come up. It should. Okay? It should. If it starts to do this, this is going to take pressure off of equities. This is going to take pressure off of gold. You can play the dollar in the equity markets, UUP. The dollar starts pulling back. You can short UUP. Right? The dollar starts pulling back. You can go long gold. Right? Yields start pulling back. That long end of the bond starts pulling back. What does TLT do? It did exactly what I told you guys Sunday night, Monday, and Monday night. And look what we got. Look at this run, guys. This was the trade. This would have paid you more than NVIDIA, I promise. This is a trade, and if it continues, this is a trade where you can take $5,000, $6,000, $1,000 and make your $15,000, $20,000, $30,000, $40,000 on. When this trade when this trade starts, I'm telling you right now, it's going to be one of those trades where it's going to make your year and it's going to put a smile on your face and you can really change your life. 2020. Do you know what you could have did with TLT in 2020 when the Fed cut rates? Do you have any idea? $500 would have taken you to $30,000 in nearly 2 days, right? Look at this move, guys, and I'm telling you, it may not look like a big move, right? You can short, right? You can take a small amount of money, and 1, 2, 3, 4, 5 days, Fed comes out and cuts, because what happens is when you start to learn these things, there's your volume. These are where the big hitters are made, right? These are where the big hitters are made. It's very hard for NVIDIA to put in a 20% move, right? And do it during market hours, right? TLT doesn't have to go 20% for you to make an extraordinary amount of money, or something that could set you up right. You just have to manage your risk first. So I gave these out Sunday night, Monday night, right? This was one of my biggest trades personally that I've ever had, was right here, right? This TLT trade. When it sets up, I'm telling you right now, it's one that you're going to always look back for and want to get it again. I promise. I promise. So we're going to be on the lookout. I've already given out this small, decent trade, and the timing was perfect. I couldn't have done any better on timing. So let's hurry up and go into things real quick. I'm going to go into that trade idea, that lesson for that trade. I'm telling you, that is so important, along with what's going on right now. You need to be watching the dollar, and these yields start to pull back. This is a trade idea for you guys. If you see the 10-year and the 20 and 30 years start to pull back, you could look for this thing to be long, right? And I'm telling you right now, this thing does not have to move as much as you may think for it to really send your account green. You need to manage your risk, right? You need to know all the things that you need to know about it, which is the dollar, the euro, the yen, the 2s, 10s, and 30s. This is a 20-year treasury here. So we also had NVIDIA earnings today. We had Russian news with the general, whatever his name is, I forget because it's late, because I've already recorded the video and I had no sound, and it was a good video. I just hope I can do it again. I already feel like I'm not, right? Because I had everything laid out nice and good for you guys. So tomorrow we're going to get retail sales. And again, if you haven't done so, I urge you, hit the like button, subscribe if you haven't already done so. I want this video and this trade lesson to get out to as many people as it possibly can, to people that don't have money to learn this type of stuff. All right, because it's so important. We have Powell, we have Christine Lagarde, Michigan consumer sentiment numbers, and then we have not tomorrow, but that's Friday. But tomorrow we have durable goods and initial jobless claims. I think here in the near future, within the next 2 months, 3 months, as we start getting into maybe November, if things continue this way, we're going to get a surprise in these job numbers. And this is really going to send the market, right? This is really going to start moving markets when we get a surprise in this jobless numbers. Why would we get a surprise? Now, I wrote this stuff down. We're in a time right now, and let's look at, you guys also need to know the Fed balance sheet. If you don't look at it, look at it. You got to know where it's at, because this is also going to help you. If the Fed starts adding liquidity, you can expect the equity markets to tick itself up. The Fed's been cut. The Fed's balance sheet has been dwindling. Nobody's been talking about it. It's actually at a new low. 814. Yes, the Fed balance sheet is at a new low, right? That's quantitative tightening. If we go to NFCI, which is financial conditions have eased, which has also helped the equity markets do the rally that we had in the S&Ps, the Qs, right? They say it's been led by the big names, but really it's been led by energy, the big names. I mean, and honestly, a lot of other little smaller companies, but that haven't reported earnings, I guess, because earnings this year were still okay. You had a few companies that were below par, but I want to say it was more than 80% of the S&P reported had an earnings beat. Um, financial conditions, I want to say, may start to turn, and there might be a little bit more tightening. Might be. All right. This is an important thing to watch also, because if this continues down, you can expect the equity markets to continue higher. Fed balance sheet again. And then there was one other thing. So with this, we just had, what did we just have? We had Macy's, we had Dick's, um, Foot Locker. You had a lot of these retail stores report that turned out pretty bad. There's a lot of people, I still feel like, that are spending money that they necessarily don't have, but they also don't know that. They don't know what's about to come, right? There's a lot of people that don't do this type of stuff. They're not in the markets. They're not worried about financial conditions. They're not worried about economic times. They're not worried about recessions, right? That's few and far between. It's not something people talk about unless, you're in this type of business. We're starting to see inventory not sell, right? If inventory, the consumer is getting ate up from fuel and all the home prices and everything going up, and their pay isn't going up, right? With the with the turnover rate of the prices of goods and services, it really eats at their weight, at their pockets, right? They don't have that extra income to spend. What does that lead to? That's going to lead to, obviously, these this type of sector, your brick and mortar sector, your services and goods. Well, not even goods, really. Your clothes, like things that people don't need, right? So with this inventory, you could get a drawdown in, sorry, and well, I just got messed up. I'm sorry. Inventory doesn't sell. What do? They put it on sale. We're going to be at a point where they start putting inventory on sale. They got to mark down prices, right? Because they want to get it out the door. They know people are strapped for cash, so they're going to have to start doing what it is that they need to do to start bringing some money in. What's that going to do? Right? That's eventually going to lead to less inventory that they order. That's going to lead to less manufacturing. You're already seeing manufacturing contracting, right? It's going to lead to job losses, right? This all has a trickle effect, and we're seeing it, right? On top of banks not giving out loans that that people would like for cars, for homes, and for whatever it is that people need for businesses, small businesses. And if they do get the loan, they're paying more. That's less money that they have to spend on other things, right? So it's all starting to take its toll. And what you're going to start seeing is home prices start to the home buyers start to come down as well. This is all starting to play itself out here, right? So I want to show you this data, and I'm going to get into this trade lesson, and we're going to talk about some trades for tomorrow. So Thursday, we do have a firm, Alta, Intuit, Workday, Gap, Nordstrom. You guys can take a picture of this if you want. Dollar Tree. Dollar Tree might be a good one going forward. We'll have to hear their earnings call. They'll probably be expecting some good things in the future with people not having that money. If people start losing their jobs, I'm telling you right now, it only takes a few out of the bunch, a couple people to start losing their jobs, and that couple can't afford some things. You're really going to start this thing will have a snowball effect. I'm telling you right now. All right. And then what happens there? Is that when Fed starts to cut rates? Is that coming? Could the Fed start to cut rates before year end? If it continues at this pace, we could start to see it in the next 2 quarters, right? We're 2 quarters down. We got 2 more to go. Or we have 1 more to go. Yeah. Well, no, we'll have Q3 reporting and then Q4 into 2024, beginning of 2024. So Marvel also, we had Nvidia today, Splunk, Snowflake. We'll get into those and what I think the markets do. So I'm going to get into this trade idea real quick. I want to show you guys this data because it goes hand in hand with what we're talking about here. Housing affordability for first-time home buyers is literally at an all-time low, just about. 1986 to 1989. Look at that, guys. Look at that. If you guys can't see it. Look at this. 1986 to 2024. This is the lowest that it's been in 50, 60 years, right? 50 years? 30 years? 20, 2000, 20, and then 30. 35 years, guys. 35 years. It's not people can't afford anything. And again, there you are. There's your 30-year fixed rate. Right? It's the highest it's been since 2000. Right? Highest it's been since 2000. And still, eventually could still start to climb. This is your heat lock. I showed you guys that already. Right? There's a lot of good information here. There is something that is not showing up here that I wanted to show you guys that's important, and that would be the government's debt with interest rates that could help also bring down. Oh, it's right here. Right here, guys. Sorry about that. So, estimated monthly cost of U.S. debt in green, ripping and roaring. 10-year rates going up as well. Why does this not go hand in hand? Well, the higher that 10-year rates go up, the less GDP you start to have, right? The less GDP you have, that starts putting a strain on the income that the government gets to pay their debts, right? So this all has an effect. Things start to slow down. People don't want to take on new loans, right? When they take on new loans, they take that money and they do something with it, right? Well, they're not doing that. Banks are tightening. Yields are where they are, and you're going to start seeing, and let's not even discount the fact of everything else that's going on. So how long is it before this 10-year does start to pull itself back? We say we could handle a 4, 4.5. You know, I come on here and I say, as long as it doesn't just rip like it has, you know, we could be okay, right? But since we've came from a place where we were that they were so low for so long, I think we'll have to pull it up and slowly get there. We've went from one extreme to another, and we're going to see the backside of that one extreme to the other is what we're getting ready to come into. Let's get into that trade, guys. All right, so today I traded Tesla, and this, again, is so important. If you guys could, please hit that like button. Subscribe if you haven't already subscribed. Share this. It really helps. I want this video to get out to someone. So today I took 2 positions on Tesla, and I'm a little early on it. I shorted Tesla today. First trade, I took profit, and I'm going to get into the reasons why I was going to be short. What did I notice that made me change the first trade and take the trade off green? Great trade. And then the second time I hit it, right? Stop loss was perfect. I didn't let it get to my stop loss. I'm going to get into it right now. Again, hit that like button. Subscribe if you haven't already subscribed, because this is the stuff that I want to put out. I don't care about what this did, what that did. That doesn't do nothing for nobody. I can sit here and say this went up, this went down, this went down, that went up. What the does that do for anyone? It doesn't do anything. Okay? It doesn't do anything. I'm going to teach you how to analyze the dollar, the yen, to gold, to treasuries, and what does that mean for the equity markets. Okay? I want you to be able to put these pieces together. Sunday night, Monday night, I came in and told you, TLT, you might want to be long, and what did it do? It just had a 2-3 day rip, guys. The timing on that was perfect, and I timed it because I'm able to identify the dollar, the euro, yields, and what's going on to put the pieces together, right? We're getting ready to make a new trade with these retailers coming up, right? So let's get into it. So let's go take it to a daily chart. It's the first thing we want to do. We could always look at the weekly chart as well, but I want to make this quick. So today I was looking at Tesla. Why was I looking at Tesla? So there's 2 things here. We're going to bring up another screen. So I'm going to put up the S&Ps on the right-hand side. To the left of us, we have a daily chart here. All right, so on the right-hand side, I'm going to put up the S&Ps. All right, and this is also going to be a daily chart. So I want to show you guys why I felt there is extra weakness. There is weakness in Tesla versus the overall markets. All right, and this is why I was going to be short, and I still am going to be shorting this. All right, this is on my list. This is a trade I will get successfully right. So, what do you guys see here just in the past week, right? 4 days. 1, 2, 3, 4. 1, 2, 3, 4. All right, we have 2 green days with Tesla, 2 green days with the S&Ps, and 1 green day. They're exactly the same, right? But they're not. Let's look at Tesla yesterday. Where did Tesla open? And where did the SPY open? All right. So let me bring this over. I probably don't. Yo, what is going on? I'm sorry, guys. Of course that's going to happen when I get everything right, right? Of course that happens. So today I looked at Tesla short for a couple reasons. First reason being Tesla on the left, SPY on the right. All right, this is a daily chart. So Tesla closed yesterday at 233. So where did Tesla open at and where did the SPY open? Right? Where did we open? Tesla opened below yesterday's close. We opened today below yesterday's close. Where did the SPY open? The SPY the S&Ps opened above it. That's the first sign of what? That's the first sign of relative weakness. Now, I'm not going to play myself because I know for a fact that Tesla is a bit oversold right now, and that's okay. All right, that's okay. There's Tesla up at 45 RSI. Where was the S&Ps today? I don't have it up there, but they're both oversold a little bit. Or at least in Tesla because they've been sold off a lot. So let's go to one chart. So I've showed you that there. All right, the S&Ps open green. Tesla opens up red. Right? It opens up below yesterday's close. The SPY opens up above yesterday's close. Relative weakness. So right there, I have an idea. Hey, if Tesla's going to be weak and we start to get a pullback in the markets, I'm going to want to look at Tesla. It's got that relative weakness, not relative strength. I could look at the SPY and be long. I could be long a stock and match it up with a possible short on Tesla when that time comes. Let's go into a 3-minute chart, and I'm going to get into this trade with you guys. So the S&Ps were strong, and I was not blind to that. I was not blind to that. I was not blind to the fact that the S&Ps were strong. So I got short Tesla right here. It was like it was pretty early. It was on this second road trip back up to the initial morning high, which was up here at 232. We came up, ripped it back. We closed this candle. This is a 3-minute candle here. I should have brought the S&Ps up with it, but it's fine. I want you guys to take notice in something, though. This is the whole point of me doing this. All right. What do I have here? I have pre-market and post-market on this chart. I have pre-market and post-market on this chart. Now, let's go to the time of the trade. So, if we zoom in, right? If I zoom in, and I'm trying to take a short on Tesla early in the morning. I'm sorry that it looks the way it does. All right? Right here. And I'm short here. Look at this RSI. This thing is overbought. You're saying, wait. That is pretty crazy, right? This is the first thing I noticed once I looked at it, right? And I'm looking at this is also a reason why I'm getting short. Right? That's cool. It's oversold. It's closed lower. It's bouncing up to yesterday's close. I want to look for that short. I want to see if it can pull back into the 100-day or just pull itself back. I looked to see if there's other news. I didn't really see anything. I'm tying everything together. But guess what? That's a bit deceiving, guys. That's a bit deceiving. Let's take pre-market and post-market off. And then we're going to get into the stop loss when I hit this thing again, because the stop loss was in the perfect place. I didn't wait for it because, again, the S&Ps were strong today. The markets were relatively strong. And I said it's not the time. It's not the time for Tesla once it broke a level, and I didn't wait for it to get to my stop loss. And I tell members, if you don't know, we trade live right here on YouTube, Monday through Friday, 7:30 to 4. Right here you can find us. You can ask questions. And again, subscribe if you haven't already subscribed. This is the stuff that's going to help you not lose money, but help you make money when you're right. Because you need to make more when you're right than when you're wrong. And the only way that you're going to be able to make correct trades is being able to identify these things. Let's go to the morning with pre-market and after hours off. Let's do it. This is the stuff people don't talk about, and they should. So let's go take it to the morning. I'm short here at a decent spot. We got our run back up to close. It did not get up to it, right? But I'm also noticing the volume. See, at this time when I enter this trade up here, this volume is bigger also because it's also including the buying that went on at that time as well. So if there's that much selling pressure, I should see this candle up here. It should be a bit higher. The selling was a bit light. Why was the selling light? Well, let's go look at the RSI, right? Oh, it's completely different than what pre-market and after hours told us. Look at that. Look at that, guys. It's actually oversold. And I noticed that, and I got my pullback into where? This turquoise level, which is a level that I have. I got out of the trade. Green. Nice trade. And I said in chat, I'm like, whoa, wait, guys. This is why you need to understand how much pre-market and after hours dictates your decision making when you're trying to look at volume, MACD, RSI, stochastics, all that fun stuff, and you're adding in more time. It's going to change what it is that you're looking at. This is why I preach. You need to really see 1 minute, 3 minute, 5 minute, 15 minute. You might even want to look at hourly. You want to look at all time frames. You want to look at it because the 1 minute, what the 1 minute's going to tell you, if you're new, it's really going to tell you where the volume's at, right? Who's in control. It's really going to tell you if that big pullback or that big draw up, if that volume is with it. If the volume's with it, then you can count on it. Because I get these wicks all the time, and people are like, wait, what's going on? I'm like, guys, the volume didn't even move. Just relax. They're trying, just relax. That's what you could use the 1 minute for. Now, would I suggest that? I'm not going to suggest anything, but I want to help you guys. This is what I do. Maybe you can take what I do and use it for your own good. So now you know pre-market after hours is going to influence your decision making, and you could see two different stories on the same chart because you're adding in more time. And what these moving averages and indicators are is price and time. It's what they are. All of them. MACD, RS, they all mean the same thing, just in a different way. Right? In all honesty, they all mean the same thing, just about price and time. Right? Where price is converging at, whether it's due to volume, you can add volume in there, but price and time, it's important. So I seen that, and I immediately got out of the trade, right here, guys. I was lucky enough that I took it off and said, let me see what's going on here. Because I took it off because I ended up wanting to draw out a Fibonacci retracement from yesterday's close to retrace the movement down to this low right there. And what got me was that we came all the way back up here, and I wanted to see if we were going to get that extension down here. But as soon as I turned it off to draw the fib, I'm like, wait a second, this thing's oversold, and I immediately got out of that trade. I was patient and I waited. Now, here's the second lesson. There's another lesson that's going to be in this too that you're going to be like, oh, okay, the light bulb's going to go off. So you have what you think is a double top right here, right? So I wait, I let this trade go, right? So we have a double top up here. I entered this trade again. I entered this trade up here. Why was my stop loss? Why would I put my stop loss right here? It was like 235, I'm pretty sure it was. I'm going to go to that level right now. I think it was like 235. Let me see here. It's right where them two circles are. My stop loss was right there. It was actually above there, and it was like right here. Right? 235.45. It's a little bit above it because I know I'm going to get some wicks, and I needed to close above this level right there at 235. Why is that? And I'm going to explain to you why my stop loss was here. Right? That thick white line right there. So, yesterday, what was yesterday? That was yesterday's support, right? Support, 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 support. It breaks, resistance, 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 right? So that is your support and resistance from yesterday, right? From yesterday. What did we do today? You put in a double top at it. I got in here and I said, I'm just going to put my stop loss right above here. I got a good entry. If it goes against me, now listen, I already know the cues are already going. I know on the daily chart that this thing is oversold. I'm looking to see if it'll start to just roll over. I don't know why. That's why I said if it happens, it happens. I was kind of just putting positions on, right? If I would have got some type of movement, it's not like the SPY was coming into resistance. But when it did get up here, I did think about getting back in that trade, and I wasn't live, so it just wasn't time. There's a double top right there. I was thinking maybe I could get another extension. I was still looking to see like what is the news that's out there that's causing this to be so weak. I still think we could get what we had a few months ago with it. Maybe not so dramatic, but I'm not seeing a reversal signal yet. All right, so for me shorting this, I know I'm early. I'm fighting the trend with the SPY. Even though I'm fighting the trend with the SPY, doesn't mean that there couldn't be a reversal, that this thing couldn't have given me some downside, a downside, a base hit, double hit, right? So my stop loss placement was yesterday's support and resistance. We made that prior resistance, which actually it was this line right here. That's why it's drawn. So I do apologize. It was this line right here. It was that line. Yesterday's support and resistance. But once we got here, this was also what? Support, resistance. You may not see it, but there's resistance right there. Right? It breaks up above it. And what's it do? It cracks back again. 134.89. It's 135. And we put in a double top up there. And we couldn't get it. I noticed level 2. Listen, they are selling this stock. I was also using level 2 and time and sales. Time and sales was really going off on the sell side. They're there. This is a trade I will be taking. Right? I may take this short with a TLT call. I may take a bank call. I may get long a bank and short TLT, just looking for that pullback, and then switch the trade back around. All right. If you're new, I did not expect you to be able to do those things, but those are, so if you go and give your money to a financial institution of sorts, right? They're going to have certain techniques that they do, and it's late, so I'm having a brain fart, and I do apologize. These are some of the techniques. Like we'll back up. We'll put this X amount here to banks. We'll put this amount on the longer end of the treasury. We'll put a little bit here on energy, and we'll put the X amount on some oversold tech or oversold health insurance with a dividend. Right? This is all strategic investing, because if they know if one thing does one thing, it should have a correlation with another, along with whatever it is that their plan is for the rest of the year. This was my trade of today. It was a green trade. What was the third last final thing? Guess what? This loss at this double top, which I put it on before the double top. I put it on up at this area because that was my resistance. What is Tesla? It is a car automotive. They do stuff with solar powers. They obviously have a lot going on. A lot of technology with them. So they're a car manufacturer. I feel like cars are going to stop selling eventually. There's going to come a time, they've already lowered prices X amount. There's going to come a time where the bank says to more than start start saying to the masses that they don't qualify, or they don't want to give them the loan, and they just say that they don't qualify, they don't want to do it because it's not worth their time, whatever, right? I think we're seeing that because you could tie this in with, any other good services of selling goods, right? So I don't think that this trade is over with. Now, I want you guys to take from this lesson is to be able to use different time frames and different know if you are using pre-market and after hours in your trading, how much of a difference it makes in your decisions, and you need to cover your grounds to make sure you're not shorting an oversold stock, right? You might think it's overbought, and I'm telling you right now, what happens from 9:30 to 4 is what really happens. Like, that's what matters. When institutional big money is in, when that bell rings, that's what gets printed, and that's what you need to pay attention to. The limit ordering and the stuff that happens after hours in other countries, right? I would only pay attention to that if you're trading futures, honestly. All right. So right now we have a lot of stocks that are pulling back, and more or less that is in the services or goods sector. Not services, really. I guess it's like services, goods sector. I don't know. It'd be this consumer discretionary is what I think it would be in. Let's look at Starbucks, right? For instance, let's look at Starbucks. And this is what's been holding the Dow down, right? Nike, look at Starbucks. Look at this chart, right? The Dow has been a laggard for a reason, guys. Look at this. Consumers are starting to cut. This could start to be another good trade if we get a bounce. You just had what, guys? What did you just have? You didn't really have the volume there. You kind of had a little bit of volume, but the volume really picked up today. Not sure if there was news. Yep, consumer discretionary, like I said. Usual pumping. Would not return it. All right, so what we're going to say is this sector, you need to be looking short, because what's happening is this money is starting to run out. People are starting to feel the effects, and the market is getting ahead of it, because it's going to come a time when they report earnings and they're going to have to guide down. I don't know how, NVIDIA does a lot of commercial things, a lot of, they do have a lot in gaming, but you're going to start seeing, this is the first part of the recession, when you really see the spending section of the market where consumers do their most spending, where they start to get cut. And they start to make, the person starts to make cuts to their spending because they can't afford it. When people start losing their jobs and things start to happen, you're really going to start seeing this downside. And I would like you guys to start looking in these areas. Your Nikes, your Dicks, whatever store you have in your local hometown, start looking at it, because they're coming down. Consumer discretionary, if you need to Google it to look to see what the list of tickers are, so you can have some ideas on some companies, right? Let's look at Roblox, RBLX. It's gotten smoked, guys. It's almost getting ready to make it a new yearly low. Matter of fact, it is a new yearly low. This was December, right? So Roblox has made a new 52-week low. All right, when this thing starts to make a bounce, I will let you guys know when I start seeing it. But I don't think you're going to get enough bounce that's going to make it worth it to just buy it, right? Maybe if you get a yield cut from Powell or something. So let's see what Powell has to say. I don't think it's going to be to the bearish side. I think he's going to say, yeah, we got one more. We're going to wait and see what the data looks like. And we're starting to see a contraction. We're seeing inflation kind of pick up. We still want to get PCE to come up. But all this stuff right here is deflationary. This stuff right now is deflationary. They know it. I know it. You may not know it. But this is deflationary. You've had it with the banks. Have you guys looked at any banks lately? All right. I don't want to keep going and make this video too long, because the point of this video is being able to identify relative weakness versus relative strength, right? Tesla sells cars. They sell an item. Well, the items that are being sold, those companies are getting hit, and it's only a little bit of a matter of time before Tesla is goes down with them. And I'm going to be on that trade. Will you be on it with me? If you could, this will be the last time I ask, and I'm going to take questions if there's anybody on here. If you guys want to ask any questions, um, hit that like button for me, please. Subscribe if you haven't subscribed, and please share this with somebody. There's a lot of information still to be had for this environment that we're getting ready to go into, right? Where you by someone coming on and saying this is up, this is down, this is up, this is down. No. We need to know how to put the picture together, and how do we trade it? How do we benefit? How do we manage risk, and how do we make money from it? That's what's important. Not just talking about what happened today. That does nothing for nobody, right? So I just went over a trade where I located relative weakness from a sector that's, it's a mega cap tech company, for now, right? So I was a little wrong, but I know that SPY can't get through the 50-day. The Qs can't get through the 50-day, right? Futures market, it was struggling there tonight, right now. Don't know if it broke it, but remember what I told you guys. Usually on the first bounce back, it's not going to break. You'll get the bounce up to it, you'll pull back, and then you'll really see if those buyers are there or sellers, vice versa, whether it's on top of it or below it, right? If you don't know what I mean, I'll bring it up right now so we can find out right now if futures market is above or below the 200 or the 50-day moving average, right? This is a daily chart. All right, so it broke it. All right, so it did break it. It broke it. That doesn't mean we wake up tomorrow and it doesn't gap below it. All right, so that's the Qs. NVIDIA reported great earnings. They don't see a slowdown. Well, guess what? Everything that's going on with China, everything that is getting ready to take place. Where is my 50-day moving average? Where is it at? Oh, okay. So if we get a gap up tomorrow, I want to look for a pullback, okay? Today was just one thing that having time in the markets and trading for as long as I have, someone else could have got really hurt. So by me taking that position off completely green, I was up like 8, it was like 13, 8, 11%, right? I took the whole thing off with a little bit of size because I knew why I was doing what I was doing. I had a little bit of time on it, so I spent a good amount of money, and that percentage really paid, and I just took the whole thing off. And what I did was I went after it the second time, knowing I also, by having that profit, I brought down my position size because I know the SPY is going, and I'm like, it's not time, but maybe I get a pullback and I can just keep scalping this. Because what my goal was too is to take those drawdowns and maybe I get a nice pullback, right? And I'm just stacking on money for when the trade takes place. I try to, it's not even scalping because I could be in it for an hour or two. But what I'm doing is I'm making money for when this trade really takes place, because when I put it on, not only do I have more size, but that's free extra size that I have to put on, right? Or if I just put my regular position size, I get the movement. I've got profit in my pocket. I've got insurance, right? I've got insurance for my risk. And this is how I make more when I'm right than when I lose when I'm wrong, right? You can look at it. You can do it however many ways, different ways you want to, however you want to do it, right? There's all kinds of ways to slice the pie, right? You can slice the pie so many ways. I could sit there and say, I've just built up enough. I could use the money that I did make, right? Really didn't make money because I just lost less today, really. I lost less, right? For the amount that I lost versus what I had out, you'd be surprised. So this is going to enable me when this trade starts to take place, how I'm really going to be able to be in it, and I'm going to be able to stay confident and really get that 2, 3, 4 day movement. And just, I'm hoping that I get in this trade and I'm going to run out of contracts. I'm still looking at TLT. So if I come on here, guys, and if I bring up thumbnails and I start talking like, hey, like, I'm not going to physically say it, but I want you guys to fish for yourself. Like, I'm trying to help you guys out so much. I want painted the picture for you. Keep the dollar in mind. If it pulls back and you see, well, if you see the euro pull up, you're going to see the dollar pull back. That's going to take a waiting, it's going to take stress off the equity markets, which should bring down yields. Like, yields should be pulling back, right? You should get that yield pullback. It should just be a a way for gold to get, gold will go up. It may not go up, but it'll go up because it's taking less stress off of it, right? At the end of the day, when the dollar is up at like all-time highs. Now, we live in a weird environment because we had inflation. But in a normal environment, when the dollar is really high, it should take less dollars to buy that item, right? So therefore that item wouldn't cost as much. So if we have a high dollar and gold was at like it should bring the price of gold down because it's going to take less dollars to buy that thing. Now, when the dollar comes down, that price of gold should go up because it's going to take more dollars. It's going to cost more. So that's how it's supposed to work. But we were in a weird environment where we had a strong dollar and high inflation. I don't know. You know what I mean? It was a weird environment that we're starting to come out of. So, consumer discretionary, guys, focus on that. Your banks, I just showed you a daily chart of banks. They've gotten slacked. They've gotten hammered. Look at that. The market cannot make new highs and continue higher with the banks down, right? TLT, debt leads equities. Debt leads bonds. Bonds lead equities. TLT is at its lows, putting in a double bottom. This trade right here, guys, could have made your summer. I'm telling you right now, this 2-day trade, this 5% in 2 days. But the thing is like, you're talking about like a huge gap up with an extension, right? It's more than just what it did today. It had a gap up and went. It was a really nice trade. There's our volume. So what am I going to look for? I'm going to look for a pullback, guys. I want to see if we can get a pullback, but we may not get it. If this dollar starts to break down, then we're going to start to see yields pull back, and that's going to cause TLT to continue higher. So watch the 10, watch the 30. If the 10 and 30 are pulling back, you can be long TLT. You could be long gold. Usually, also, if you don't know, when banks sell off, that means yields are pulling back, which means the price of TLT is going to go up. So if banks are pulling back, TLT should go up. If TLT goes up, banks come down, or if the banks go up, TLT should come down. That's also something that takes place, right? We've seen banks come down, but TLT has went down. Now banks, I don't know if they reversed, but TLT, like I said, we're in a weird environment right now. It'll start to make that change where they'll find each other, right? And then they'll start doing the opposite. All right. So that was the trade idea, right? Understanding when we have a lot of time added, pre-market, after hours, and pre-market added to our charts, what it does with the moving averages. Your moving averages are going to be plotted different. Your RSI is going to be different. Your MACD is going to be different. Look at it with it on and look at it with it off. Mainly use your technical setups, your support, your resistance. But to help you, give you confidence, you need more than just support and resistance, right? You need more, right? To help you understand that you're making the right decision in it, and you can hold it on these low volume pullbacks where it's trying to shake you out. It's hitting them orders and they're not selling because they're already short, and it's just a wick. Like, it's just taking a bunch of orders on low volume and people are getting nervous. Like, oh my God, it went against me. I'm so red. But really, they can't control their emotions. So if you guys don't have any questions, yeah, that's cool, man. That's what's up, man. Yeah, Marvel is going to be on watch. I'm going to be watching Snowflake as well. There's a lot that I'm going to be focused on. I'm probably going to start looking at positions if it's not too late for these companies, because I'm going to tell you right now, I think a lot of people might be upset tomorrow that these markets might pull back. Especially, here's what I want to look for tomorrow, guys. You have Powell on Friday. How does positioning, not worried about NVIDIA earnings because NVIDIA is just one of a kind, right? How does positioning take place going into Friday with that Powell meeting? All right. You have to remember, I don't give a crap what Nvidia did. It's already over a trillion, right? It's already as big as Apple, right? It's already as big as Apple, or not really as big as Apple, because Apple's what, 2 trillion? Almost 3 at one point. The markets cannot go up with the banks making new yearly lows. Okay? Nvidia's only one company. Look at Apple, right? Let's look at Apple. It's down, right? Nvidia is not going to keep them. So, are you kidding me? Is it me? Like, we're. I want to see what happens here. I want to see. Look at the volume, right? You've had some already volume, but look, it's still not as much as the selling that we've had. Look, I'm telling you guys right now, institutions are selling. Look at this. This is Apple 1. Like, here's your average buy candle, right? Right there. I'm going to put a line here for you guys. This is where your head needs to be. Nvidia is not going to hold the market up, I promise. Because what happens is Nvidia needs all these other companies that aren't making any money. They stop ordering from Nvidia and people stop buying computers and things slow down, Nvidia is going to get hurt. There isn't going to be this AI fun, right? Look at this. You tell me who's in control right now, right? You tell me who's in control. I got 2 green candles up here, but yet I got 1, 2, 3, 4, 5, 6, 7, almost 8. 8 to 3, 8 to 2. You got one there, so 4, right? And we can keep going. Look at the selling, guys. It's coming. They piece out of their positions, and when it gets going, this is what I thought, and I made a video about this, is that I feel like we're getting our last rally up to roll it over. I do. I kind of feel like that's what's getting ready to take place, is that we're going to get this rally up and everything is getting ready to get smoked, where we go up, we try to test the gap in the 50-day, and you literally get what you got in Bitcoin, and it literally does the waterfall, and this happens. It's coming. I'm telling you right now, be prepared, because when this shit, if it hits the fan and you get this China news with that, if it happens and this job numbers start ticking up, you start hearing about people losing jobs, and this is where it starts. It may take a little time. Maybe we got a little bit of time, guys. I'm telling you, this waterfall, the same pattern I told you guys with Cryptoin of Bitcoin, to take a picture of that chart, because once you see it, you will not forget it, and you will be able to make those trades that you dream of. You have to, the only way you're going to do it and be able to identify it is if you take a picture of it. Sink it into your brain that when this takes place, I am not missing out on it. Right? There's a lot that's going on here. That's a failed breakout, right? That's holding support, and then it turns it into resistance, and then you get the rollover, the waterfall. It just rolls like boop, right? And it's just steep, heavy volume. Roll, bang, and then you just, once it gets, I'm telling you, I know these and can take advantage of them, because I've taken pictures of them, and I look at setups, and I go through all my charts, and I'm like, I know this setup. I know when something has just like a capitulation type of sell-off, right? And I see it when it sets up, because it puts in these really small candles, and it's just like, it goes from one, it tries to break out, because when you see something sit up there for so long and it just doesn't go up, it's only a matter of time before it comes down. And I tell you guys that all the time. IWM, what's it been doing? And what did I tell you it did? It made that one last final push to go higher, and then ensued the bear market. We sat up here for how long? Since June, guys. We broke out in June. 2 months, haven't done anything, too much supply. They finally gave it up. Take a picture of it so that you know, when you get that rollover, that shit's getting ready to hit the fan. All right. And I told you guys we were going to get big up moves and big down moves after this Fitch downgrading. Moody's is talking about the banks. Like, the stuff's coming, guys. So sorry to make this stream that long. If you guys don't have any questions for me or anything, um, that's fine. If you want to leave them in the comments if you see this later. Again, I tried to the video that I made earlier was a lot better. The mic wasn't on, unfortunately. I will ask one more time if you guys could seriously hit that subscribe button, hit the like, send this to someone that you may know, Facebook, post it, whatever you'd like to do. Share it with someone, but more importantly, just like it, subscribe. I put out a lot of this good content to help you guys prepare. I wanted to focus on that trade today and being able to also identify the trades that I gave you guys Sunday night, Monday, and Monday night that just went off and would have seriously made your week, and you wouldn't have had to trade the rest of the week. You would only be trading for fun because it would have made you a lot of money, right? Well, you would have had, it's just the more important, it's not about making money. It's about being able to identify by yourself and realize what's going on, right? Understanding what is going on that causes this and what can you see and identify before and tie it to another move before that move happens, right? I laid it all out. We're watching the euro. What's going on in from the yen, the euro? What's the dollar doing, right? They want to take off. The dollar's going to pull back. What does that mean? That those yields that exploded, they're going to pull back. When yields pull back, TLT goes up. Why is that? Because when yields come down, the price of that bond ticket goes up. So the price of TLT will go up. That's why TLT has sold off to lows, because interest rates have soared. Interest rates soar because of future risk, right? That debt, the person who is buying the debt has to meet they have to say, does the risk to reward, is it worth it? If you ask me, hey, could you buy this 2-year debt from me, and you had no job, you had nothing, or it was just risky, I would say, okay, I will, but what's the interest going to be? Because chances are I might not get paid back. I got to worry about that. What else do I have to worry about? You also have to worry about what a lot of people also don't talk about, is buying like they did back in spring. Everyone went and bought bonds, not knowing that that rates were going to continue to climb, and now the interest that they have on the bond and the fact that it went up so much, that interest isn't going to make up for it, that drop in bond price. Do you see what I'm saying? So if I were to buy it at 3%, yields jump up to 5, I've lost, let's just say 20% in the ticket of the bond, and I'm only getting back 3 or 4. Yes, treasuries, you get your amount with that, but I'm saying you still have that drawdown, right? There's still that drawdown of being down on it. You get margin calls from big boys that have big money that do that. They can get margin called. It may come. Where are they going to get the money to fulfill that margin call? They're going to pull it out of equities. They're going to pull it out of that big ass run in Nvidia, because you're going to start having these yields start pulling back. You're going to have risk change. You're going to have risk duration start to change. You're going to have positioning start to change. This is why I'm wanting to also see, if the Dow was going to pick itself up. But after today in the news, we got the Dow is not going to pick itself up. The Dow starts selling off. It's only a matter of time before the Qs, the SPY, start doing the same thing, because you're going to have the people that actually move this market. They're going to move it, and they're going to suck the floor right out from underneath of you, because they're going to take that profit, and you're going to buy into it, and you're going to be still buying the tops and selling the bottom, and you're never going to make it because you don't know how it works. You're coming into the second half of the years, guys. We're already kind of started the first quarter of it. The next 6 months, they're going to position themselves for it. And if you're telling me that they're not going to they're not going to be selling a position that they're up 2, 3, 100%, Sorry, it was the TV. So that's all, guys. I don't want to make this forever. Thank you guys for joining me tonight. Again, leave your questions in the comment section. If you could, please hit that like button for me. A lot of you guys have watched it. This is the only video where I'm going to really stress you guys to really like it, because I want this video to get out there to someone that tries to trade and can't make it. Right? Maybe they can find this channel. Maybe they can get on here and ask me for help or ask me questions so I can help them. We're coming into a tough time, guys. People are going to start losing their jobs. We're already in an inflationary environment. It's already as tough as it is. I want to help people succeed. That is my only goal. That's it. I don't ask for money, right? I've just given you guys a huge trade on TLT, but I did it with oil. I did it with everything else that I've done here, right? Because I know how to tie the pieces together to help me say this future price action should take place, right? So thank you guys for joining me tonight. I hope you guys learned something. Use what I was telling you guys, right? Use more. It's more than just support and resistance. It's about taking all the indicators and looking at all the time frames to help you make your decision and tying it with whatever it is that you use. Like I said, yes, I was going against the grain with the S&Ps. The overall market was going up, but that part of the market was going down, and it's still only a matter of time that my position on it's just a little early, and that's okay, right? I was still able to be green. I was still able to be green and manage my risk for the second trade. That's what it's about. This is how you make money in the markets, by losing less. Have a great night. Hit that like button. Subscribe, guys. Thank you guys for joining me. I'm sorry this was a little bit drawn out. I'll see you guys tomorrow morning. You guys have a great night. Leave your comments in the comment section. Like and subscribe. Share this with a friend. I'll see you guys on the next one.